right. I think Chakra Yendapali from Princeton CFO Services. Welcome. All right, I think we can get started. I want to welcome everybody to the Corona and Entrepreneur Operated Business Responding and Growing. Today we are gathering again with Aisha Hamilton from Hamilton Law Firm and Jason Meyer with Meyer Business Law, and myself, Elisa McCabe from First Steps Financial. We want to let everybody know that if you have any questions, please put them in the chat box and we will be answering them. Let me just tell you a little bit about our panelists today. Jason Meyer's law firm is dedicated to the legal needs of entrepreneurs and the businesses they run. Jason will focus on what new grants and loan programs are available for entrepreneurial small businesses, including solopreneurs and consultancies, and also address other legal implications of the pandemic, including structuring your business and contracts for disaster and interruptions. Aisha Hamilton focuses her practice on employment law, and she will be talking about the new laws and regulations affecting employers and employees, sick leave, payroll relief, and how they specifically affect small businesses, independent contractors, consultancies, and owner-operators. Again, I'm Elisa McCabe with First Steps Financial. We are a dedicated team of accounting and advanced QBO Pro advisors, and our mission is to create a path to success and wealth for small businesses by simplifying processes, organizing financials, and gaining insight using technology and strategies. All information and content on this webinar is for general information only. If you would like personal information, please reach out to one of us and we'd be more than happy to help you. You can see these are our topics and tips that we're going to talk about today. Jason's going to discuss the relief program update, contract strategies. I'm going to talk about the tax credits, and Aisha is going to discuss unemployment. We also definitely want your questions, and it says start typing, so definitely fill up the chat box and we will get to them. And we have Danielle Gill here. She is with First Steps Financial, and she is the digital marketing manager for us. And she will be reviewing all the questions in the chat box. She will also be posting links in the chat box for everybody to get information. Most of our information here comes from some government agencies and some places that can really help you out with additional information. I'm just going to say hello to a few more people. Gail Hulko, computer system validation consultant.
Hi, Gail.
Sharon Manto and Philip Ritter. Manto Family Eye Care and Ritter Custom Woodwork. And I'm going to turn it over to you, Jason. So go right ahead and start with your relief.
Thanks, Elisa. Hi, everybody. Great to be with you again. And great that you're all still plugging away and doing what you can. And that's a big part of why we're here today. There's a headline, obviously, and the headline is, yes, the Senate approved aid, new money for small businesses for the loan program, as well as for other elements of coronavirus relief. The Senate approved the new money. The House is expected to do so in the next couple of days. The President is expected to sign it, and these programs will be refunded. And the big question is, so what? If you looked at these programs when they first came out several weeks ago and thought, free money from the government sounds too good to be true, you were right. For most businesses, not for all, but for most businesses, the promise of these programs or the reality of these programs really did not meet up to the promise. But that really leads to the theme of this webinar and why we wanted to come back with you again today in follow-up to what we did 2 weeks ago, which is, okay, this is the reality. This is what things are looking like. but we're entrepreneurs. What are we going to do about it? How are we going to rise to this challenge? That's what entrepreneurs do. We take the hand we're dealt and we grow from it. And we wanted to talk about what to do with this particular hand and how it's dealt. So I'm going to talk again about the relief programs and where they stand now, and some contract strategies. Lisa's going to update on tax issues, Aisha on unemployment, and we really want to have plenty of time to just answer your questions and talk before we get to some hot tips. And Elisa was kind enough to introduce me and my law firm, and hi to all my fellow members of Tiger Labs. Good to be with you again. So let's talk about these programs and update it. Now that the Senate has acted and Congress looks like it's ready to refund the programs. Not going to go into deep detail on these programs. We did that 2 weeks ago. You may be up to here with descriptions of these programs in terms of what they require. We really want to focus on what they mean and how to apply them. And if you want to get into the ins and outs of the legal requirements of the program and what they take and what you have to show and how they get forgiven, we can get into that in your questions and answers. Just say, hey, remind me. Or, of course, you can reach out to any of us individually and we'll be happy to go into the detail. But let me get to the headlines for today. So the one that gets most of the attention from the federal government is the Paycheck Protection Program, the PPP. And we're now about to enter round 2 of the PPP. Round 1, as the New York Times reported today, took only 13 days to sell out for the SBA to go through all the money Congress had given it, doing something like 14 years of loans at once. This loan program was designed really to curb unemployment, to give companies a way to continue to employ people instead of putting them onto the rolls of the unemployed. And by continuing to pay them, what the idea is that continues to fund the economy. They're low interest loans, up to 100% forgivable, depending on what you spend the money for. And they are issued to you by banks who are SBA lenders. So you apply for these loans and you get these loans from your bank. There's extra money in the new tranche. What Congress is doing now is another $320 billion of loans. $60 billion of that expressly earmarked to go out through small lenders like community banks. But there's still issues. And let me cut to that, right? The one issue is that it's still finite. If that first tranche of money covered, some say, like 5%, of the businesses that applied for PPP loans. Okay, so maybe this one picks up another 5%. That leaves 90% of us out in the cold, even if we applied. The other issue to me is, one of the places where I think these loans are really not meeting the original promise or the original idea. One problem is that the first tranche, a lot of that money actually wound up going to larger businesses. Especially things like big restaurant companies, because there was a loophole in the law that was trying to pick up franchisees. And instead it allowed companies like Shake Shack, famously, and other restaurant chains, Ruth's Chris, for example, to pick up tens of millions of dollars in loans under that loophole. Congress thinks they've got it now, so this is going to the little guy. But let's talk about the little guy and something that I know is common to many of you on our call today, and certainly to many of my clients, which is you're set up as what the government would call self-employed. You're getting your money. You're not paying yourself a W-2 because of the expense and potential double taxation from making a formal payroll when you're the only person who regularly gets paid. If it's you and contractors on 1099, chances are you're just taking your money through draws, through distributions, and you're reporting on your taxes through a Schedule C. Well, if you're doing that, the rules for the PPP say you're limited to about $15,000. That's about all the loan you're going to get. The amount of loan is tied to payroll. If you don't have much in the way of a formal W-2 payroll, you're not going to get much in the way of a loan. $15,000 is useful, but it may not really keep the doors open. You may have a way, depending on the 1099s you're paying, to increase that. It gets down to individual cases, but there's certainly limits to how much you can borrow under this program if you are classified as self-employed. The other issue to me, if you're classified as self-employed, is the new rules behind this program say you have to prove your amount of payroll by showing your 2019 Schedule C from your tax return. Okay, well, using my Schedule C makes sense, but my 2019 Schedule C? Like, didn't the government say I had until July to finish my taxes? Wasn't the whole idea that I could spend my time and effort right now on keeping my business going instead of the time to file my taxes and to pay my financial professional to help me file my taxes? I was supposed to be able to wait for July for that. But if you're waiting, guess what? You can't go get a PPP because you need your 2019 taxes. So a couple of places where life for the little guy on these programs is really not all cracked up to be. The other program is the EIDL, the Economic Injury Disaster Loan. Again, this is a loan directly from the SBA. It does not involve lenders. It's basically the same program that would be there through FEMA if we were in a hurricane or tornado situation. It's a low interest loan. It does not require a personal guarantee below $200,000. And the idea of this loan was that if you asked for an advance of $10,000, that would essentially be a grant that would be given to you within like 3 days of applying for the loan, and the government would not expect it to be repaid. It was disaster relief. And I know for many of us, that absolutely fit the bill. Like, can I just keep some spending money around, keep my working capital up through this program? And millions of companies went on following that promise and applied for the loan. And two things happened. One is they ran out of money in a big hurry because it was a good idea. And so a lot of people applied for it and they didn't have enough money. But the second problem is after the loan was announced, after the program was announced, after so many of us went to the SBA website and filled out the quick form and said we wanted that grant, then the SBA came out and said, well, because there's so many applicants and so little money, we're going to limit this program to $1,000 per employee, which means if you employ less than 10 people, you're going to get less than $10,000, which means if you're self-employed, maybe you're going to get $1,000 or nothing. Because when you first filled out that form on the SBA website and it said how many employees, you may have put down 0, because if you're self-employed, technically you don't have any employees. No one's getting a W-2. Or maybe you put down 1, thinking of yourself. Or maybe you put down 2, thinking of yourself and that 1099 you always use. Well, if you did that, this is a program worth $0 to $2,000 to you if you wind up winning the lottery and they come around to you. So again, the EIDL really, to me, is not living up to its promise, especially for the vast majority of small businesses, which are the smallest small businesses. But as we said, the theme here is really, okay, what do you do about it? What's the takeaway? And the takeaway is, you know what, get in line. And I mean that in both senses. One sense is the get in line, like, okay, buddy, we'll see if we ever get to you. But the second sense is go ahead and get in line. You got, if your application's out there, let it ride. If you haven't applied yet, go ahead and apply. Why do I say that? Number one, hey, some money may be better than none. You can make your own cost benefit decision about whether it's worth your time to get $15,000 under the PPP, or maybe a couple $1,000s under the EIDL. But if it's worth your time and you've got the time, go ahead and apply, because there may be money in this round, and all press reports are there's going to be a third round and maybe a fourth round. The federal government has the big advantage. It can print money. The lesson from 2008 is the federal government can actually print a lot of money without really having much of an impact on the economy, and they're going to do it. So eventually, they may get around to you, and go ahead and get in line. If that means do your taxes, okay, go ahead and do your taxes. You have to do them for July anyway. Part of the idea of this time may be it's a good time to get your financial house in order and your legal house in order. So, the worst case scenario is you've done your taxes and you did the financial upkeep you promised yourself you were going to do, and then you can go ahead and get in line. Another comment I'll make about these relief programs at this stage is keep watching the New Jersey Economic Development Authority, the NJEDA website. The New Jersey programs run out of money even faster than the federal programs because the state can't print its own currency. But the state is trying hard for smaller businesses. There's some very interesting programs from the state. And if you go to the EDA website, there's actually a little wizard you can fill out that will tell you what's available. If you have, I mentioned this 2 weeks ago, I'll mention it again quickly now. If you're privately funded and your funders, they may be VCs or they may be just, angel investors or friends and family, there's a program from the state where they can lend you more money, and a substantial amount of that loan will be guaranteed by the state. So keep watching for the state programs. And my final comment on these programs is watch your compliance. I've talked to a lot of businesses who are following the strategy of, I'm going to apply for multiple programs and see what comes through. And I think largely that strategy is fine as long as you're careful with what you do with the money if and when the money comes in. You want to be careful not to, for example, claim that you spent the same dollar on payroll to 2 different programs, or to tell the unemployment authorities one thing and tell the SBA something which is factually different. Watch your compliance in these programs. It's okay to apply for multiple programs, but keep track of what you're doing. So that's what I would say about the relief programs at this point in time. Let me jump quickly to other strategies, and what else should entrepreneur operated businesses do at this point. And really what it comes down to is be an entrepreneur. What do entrepreneurs do with challenges? They look how to turn them into opportunities. They look for ways to make money from them, basically. Okay, so how are we going to make money from this one? That's what entrepreneurs do. That is our power. That is the mindset we come at business with. How do we take advantage of it? And let me talk about some things in my little corner of the world. Let's talk briefly about your insurance policies. Chances are you don't have business interruption insurance, okay? Chances are if you do have business interruption insurance, it's not going to cover this because the insurance companies put in various riders and exceptions for things like pandemics. But the lesson we're hearing from the insurance world is go ahead and ask, call your carrier, find out what kind of claim you can file, find out whether you should go ahead and file a claim anyway, because if nothing else for public relations purposes, carriers may come through and grant some kind of relief. I will say that my auto liability carrier, for example, just basically sent out checks to everybody. Why'd they do that? Because they realized their risks were way down. People aren't driving. So they're pocketing a lot of money against risks they don't have to cover. And since it was a mutual, they went ahead and gave some of that money back. So, look carefully at your coverages, talk to your agent, see whether there may be something you want to take advantage of. And one more quick piece of advice is check your profiles, check your declarations page, and make sure that the facts that you declared to your insurance company on that declaration page are still operable. I'll give you an example. You probably told your car insurer you're driving 12,000 or 15,000 miles a year. Well, now you're not. I don't really see how I'm going to put the mileage on the car I told my carrier I was going to put on. So I went to the carrier's website and I brought the mileage I predicted for the year down, and my premium went down automatically. Didn't have to talk to a soul. So just remember, we are in a new factual universe. Your insurance should reflect it. In the world of contracts, I want to talk briefly about the sort of contracts as defense and contracts as offense. By defense, I mean, what do I do about the landlord? What do I do about that supplier who's got a long-term deal with me? What do I do about these major contracts that are the biggest hits to my cash flow when I'm looking at having a prolonged period without the cash flow I expected? No surprise, I would say Ask. Don't be silent about it. Don't just not pay. Get on phone, get on the Zoom, get on email, and start the conversation about what you can do. And before you have that conversation, read the contract. Or, even better, from my point of view, call a lawyer and have the lawyer read the contract with you. And find out what it says and what it provides. There may be something in the contract about exactly this situation. There are things called force majeure clauses or act of God clauses that excuse performance when something big happens, like a disaster, that makes it impossible to perform. Sometimes these have exceptions that don't apply. Sometimes they won't apply, but sometimes they will. Check and see whether you have that opportunity for relief. Check and see about notice clauses for things like automatic renewals or missing payments and what they say. And mostly, be prepared to make a trade. Find out something in that contract or in your relationship that might cost the other side some money. And that's where you can begin to have the discussion about what you're going to do. With your landlord, is there something, is there annual maintenance they had to do? Or at least have the conversation, look, if I have to move out and you bring in a new tenant, the new tenant's going to want new carpet and new paint and a build out. And I don't need that stuff. And I'll even write down now that I'm not going to expect that for the next year and a half, if you can give me some relief for 3 months. The main thing is when you're working with whoever the party is on these contracts, remember that a simple forbearance, like, well, you don't have to pay me for 3 months and then you can pay me, that's not actually going to help your cash flow. That means you're going to wind up having double payments to make at just the same time you're trying to get your business cranked up again. So be careful about what you agree to, and be careful to write it down, and make sure that what you agree to and what you write down actually will work for your business. On offense, it's much the same thing. What are you going to do with your clients and your prospective clients? And, this is a good time, I think, to get your house in order and to think about the new world and to take advantage of it. When I talk about getting your contracts in order, let me give one example. It applies to a lot of kinds of businesses, but this is an example that always comes first to mind. If you're doing any kind of work that involves home contracting, anecdotally, the chances are overwhelming that your contract does not comply with what the state of New Jersey requires your contract to have in it. And the bottom line is that means any old client you go and do work for could decide at the last minute after you've done the work to stiff you. And the state of New Jersey says, yeah, your contract didn't comply. You can't enforce that contract. So if your work's down because you can't go visit people's houses, spend the time now to make your contract do what it needs to do. And while you're at it, think about what your clients will need on the recovery phase for them to be able to do business with you. Maybe you want to change your payment terms. Maybe you want to do something where you don't get paid as much up front. You get paid something up front, but maybe you're prepared to delay payments. Maybe you're prepared to do some horse trading. From the same token, maybe this is a good time to start to team up with other businesses who can do things with you, and you can get some safety in numbers. Bottom line is, it's a time to be creative with your deals, but to make sure whatever deals you make, you write them down. You've got the time now to do it right. So do it right so you can depend on these contracts and these deals as we recover and things get better. And with that, I'll stop blabbing for a minute and hand things over to Elisa.
Thank you, Jason. That was fabulous. I need to share my screen. All right. So what I'm going to be talking about is, so if you didn't get the EIDL or the PPP, there is still hope. And actually, for some people, it might be a blessing in disguise if you didn't get the PPP or the EIDL. This came out with the CARES Act. It's called Employee Retention Credit. And this is the qualifications if you're eligible for this. You have to have been fully or partially suspended operations during any calendar quarter from an appropriate governmental authority. Again, this is open to interpretation. Someone read that and they said, well, doesn't that mean everybody? And I thought, okay, I guess you could read it that way. But again, this is from the IRS website, so go read it. And I highly suggest that you talk with somebody about it. And if you haven't been suspended, did you have a decline in gross receipts of more than 50% when compared to the same quarter in the prior year? So your gross revenues would have to be down 50% this quarter versus last year at the same quarter. So you can find out if you're eligible for this. If you are eligible for it, okay, sorry, I think I just muted myself. So if your company is eligible, it's for wages, qualified wages between March 13th and January 1st, 2021. You can get up to a $5,000 credit per employee. And this is in total for that time period. And how do you get your credit? You apply on your 941, your quarterly payroll form. And if you're thinking, I don't file my 941 payroll form, that's because your payroll company does. And payroll companies will be coming out with information about this. Some of them are ahead of the curve. Gusto is one of them, completely ahead of the curve. Danielle's going to put Gusto in the chat box. She's going to give you a link. If you already have Gusto as a payroll provider, they already have all of this available. And all you have to do is click on the link and they'll help you. They fill out the form for you and they provide you with additional information. Make sure that we also are providing the link for the terms and conditions of it. There are some more detailed things that you might want to look into. One of the great things is that if your credit is more than the tax owed, you actually get a physical dollar refund from the federal government. So this could actually be better for you than the PPP, which is why I tell you to weigh your options. Find a tax preparer who can weigh the options for you. Any one of my clients, we can provide you with the information, but I still would suggest that you speak with a CPA to find out which one makes the most sense for you. There's one more option, which this is available to everybody, and it's the employer payment of Social Security tax. And what this is that allows deferral of the employer's part of Social Security tax. And this is going to be on your Q2 941 form. It's not on the Q1 form that was just filed, but as I understand it, they're actually adding several lines to the 941 form. And again, this is all going to be done through your payroll company. Unless you file your own 941, and then you'll have to learn how to fill it out, your payroll company should be having all this information. It can be used in conjunction with your PPP loan. This is the only one I've seen that you can use it. You can, because it's not a credit, it's not a grant, it's not a forgiveness, it's just a deferral. You still have to pay this money. It just defers it out. So you can use it with the PPP until the date of forgiveness is issued. So as I understand it, and again, not enough clarity, but as it's written now, and they may provide more guidance, if your loan forgiveness, if the bank says, okay, as of June 1st, your loan is forgiven and you don't have to pay that part of the PPP loan back, that's when you can no longer take advantage of this deferral for Social Security tax. You must pay the deferred amounts by the due dates to avoid penalties and interest. 50% is due by the end of this year, and the rest of the amount is due the following year. So there is hope. There are other programs out there to provide some relief if you have employees. So if you have any questions about these or anything, put them in the chat box. We'll get to them. And Aisha is going to talk next.
Hi, everyone, and thank you to Jason and Elisa for great information. Thank you to all of you for being here again. We see this as an opportunity to be able to provide some very generalized information. As Elisa mentioned, and the lawyers in the room, we have to reiterate our disclaimer, which is this is not specific to you, your company, but it's generalized information to get you thinking about what your options are. And then if you want some more specific information, reach out to the professionals in your life and get tailored information. So here we are. I don't know, it's week 7, maybe week 200. At this point, we've probably lost some sense of what it means to have a work day and what it means to have a weekend. If you're like the 3 of us, you're working all the time. You're working from home, and you're also entrepreneurs. I know we have a lot of entrepreneurs on this call today, and so I'm going to tailor my comments to business owners. It's a scary time, whether you've been in business, I've been in business for over 15 years, or if you started this year, if this was your big thing for 2020 was to start off your business. There are the protections that Elisa and Jason talked about. My advice to you is don't count on federal funding. Apply for it, as Jason said, get in line. But listen, unless you're Roots Chris, you're probably not getting it. So be realistic about your options. And we're going to talk about, what I'm going to focus on is some of your unemployment compensation options. As a business owner, someone with a C Corp, someone who is doing 1099 work, we would have always assumed that we were not eligible for unemployment benefits. That's not true anymore. So you can, if the easy case is if you had an S Corp set up and you received a W-2 and you paid into unemployment, the New Jersey Department of Labor is saying they call that a clean application, which means you'll get your benefits. One of the things we reiterated last time is you will get your benefits. It's likely to come through in about a week. Their processing time may be slightly longer, but if you have that clean application, the simple application, you're going to get the benefits, and that the additional $600, which you will also get, it comes as a separate check, but you'll automatically get that. There isn't a separate application for that. So that's your easy application, okay? You get 60% of your pay up to a maximum of $713 a week. That's not counting the 600. So the 600 is on top of that. And that's not a bad benefit. The other option is for 1099 workers. So if you had a C Corp, if you were a gig worker, if you were paid and issued a 1099, you now qualify for Pandemic Unemployment Assistance. That's the PUA program. So to be able to keep your wits about you in this alphabet soup, just remember PUA. That is where it's an additional benefit under the CARES Act. And it's where the government is saying, if you've lost a significant portion of your business, you don't have to have lost all of your business, but you need to be able to demonstrate, I had this contract for work in April. Here's a letter showing that the contract was canceled. I no longer get it. I'm able to show that I've lost a substantial portion of my income. You can file for the PUA. Again, it's worth filing for it. It's worth trying. The DOL has said that there is pretty clear guidance from the US DOL that they will be approving these applications. And so New Jersey was waiting for that guidance, and now will begin processing those applications. The other part of this alphabet soup is the PUC, which is the the pandemic unemployment compensation, which gives you that additional $600 a week. Remember that starts from benefit week of April 4th, and it currently is scheduled to end July 25th. There is some potential that they might extend that period, but it's a limited period. It's worth getting in line for it. And then the PUEC, right, is Pandemic Emergency Unemployment Compensation, is the extension of, you used to get 26 weeks of unemployment, now you get 39. And that only applies to your basic unemployment application. And so that's really going to take you through the end of the year with some unemployment benefits. So that is likely to also apply to the PUA, which will also is now extended to 39 weeks. So these are good benefits to try and file an application for. The original sort of kickoff to all of this pandemic aid came through the Families First Corona Response Act. So the FFCRA provides for certain benefits that employees get. As an owner, you're not going to get those benefits because essentially, if you're a single member LLC or a single member entity, you're not paying yourself your 80 hours of paid sick leave or the 2/3 pay for 10 weeks because you can't work anymore because your child is home. But you're being told now that if you have to take that type of leave, please document it carefully. Document your doctor's note saying that you or someone in your household was diagnosed with COVID, or you, for some reason, some COVID-related reason, were unable to continue to work in your business, and you will then get a tax credit for it. But now's the time to be documenting that, not when you're preparing your 2021 tax returns and scrambling around to recreate the record. Do that now. Keep a folder. Anything medical related, anything childcare related, anything school related, just absolutely keep your records clean now. If you had employees and you decided not to lay them off because you thought, hey, I'm going to get aid under the CARES Act, or I'm going to get something from the NJEDA, and none of that has panned out yet, that may be time to start thinking about layoffs. Even if it's one employee, what's really important when you have a group of employees is to consider the layoff in the context of a category of employees, not specific employees. You always have to have in the back of your mind the analysis that the layoff cannot appear to be discriminatory in any sense. Please protect yourself now, right? Document the reason for particular layoffs. You'll do a very clear letter to your employees explaining the need for the layoff as being a business-related reason. You didn't get the aid you thought you were going to get, and now you have no choice, right? So one of the important things to remember is neither the CARES Act, the FFCRA, none of these statutes require that you incur debt in order to be able to keep on employees. If it is simply not a good business decision at this point to keep on employees, it's okay to engage in layoffs because that is a business-related decision. You can think about offering severance. You can think about, one of the things you have to consider is what does your employee handbook say with regard to paying out unused sick time, unused vacation time. And these are, more specific questions that I'm happy to answer offline. Let's deal with an employee scenario. I get this question all the time in calls now. I don't want to go to work. I'm in an essential industry. I don't want to go into the physical location because I'm scared I'll contract COVID. So my first question is always, do you have a medical reason that says it's not a good idea for you to be in a public environment? And absent that medical reason, quitting a job because you're scared you'll get COVID it's not going to entitle you to unemployment compensation, because your employer will simply say, you quit, you have a job, And you don't get to, without some form of medical reason, you don't get to just not come into work. So, you know, that there's difficult scenarios out there. I do tell the companies that I represent, think forward to when you're going to be back up and running, and think about how you're going to want your team there with you, and be human about it. If someone is unhappy about coming to work, and they're anxious about contracting, you know, this public health crisis and contracting COVID, then think about how you can make it, you know, if there's an opportunity to allow them to telework, if there's just the opportunity to say, okay, you know what, I'm going to lay you off. I don't want somebody here who doesn't want to be here, because that's certainly going to affect employee morale, and it's going to affect your just productivity and efficiency. So these are things to think about. But I think my most important tip to you is focus on the big picture. This is a point in time. You will be back up and running. You're all entrepreneurs. Now's not the time to give up on your entrepreneurial spirit. It's really important to say, what are the things I can do now to make sure I keep building my business, to do all of those little marketing things that I never had the chance, never had the time to do. Now's the time to do it. You know, one of the things I've sat down to do, and this may be, you know, sort of a helpful trick. It might be something you all do anyway, and I finally found the time to do it. Make a list of every single one of your clients over the past 2 years, 3 years, and write down exactly who they came from. And you'll see a trend in who is your best referral source. What category of person is your best referral source? And then start thinking about where you want to continue marketing. You're going to think about, was this particular Zoom group a good resource or another place? But now's the time to do some really critical business development analysis. And that's all I have. So back to you, Alyssa.
Thank you, Aisha. There's a couple of questions in here that maybe you can give some thoughts on.
Sure.
There was, okay. So someone asked, is unemployment, can you file for unemployment as a sole proprietor?
Yes, you can now.
Yes.
Now you can. You couldn't in the past, but now you can, and you can certainly then represent, you know, what you're applying for is the PUA. It's that Pandemic Unemployment Assistance. And so do a little bit of checking on the Department of Labor website, because they're saying if you have already filed a regular unemployment application, filing for the PUA might void that application. Now, I'm not sure about that, because I think that the New Jersey Department of Labor website runs on COBOL. So my guess is they're not actually, the applications aren't talking to each other, but maybe they are. If you are a sole proprietor, chances are you received your income through a 1099 scenario rather than a W-2 scenario. You'll be perfectly comfortable filing for the PUA, which is the Pandemic Unemployment Assistance Program. And the applications are either available now or should be very soon available on the New Jersey Department of Labor website.
Okay, and then
Aisha, that's assuming that as self-employed or a 1099 recipient, my income's going to have dropped quite a bit to have done that, right? I mean, I need probably need an income that's, you know, if I went from $15,000 a month to $10,000 a month, I'm not going to qualify. I need something that starts to look like unemployment from my perspective to really apply for that. Is that right?
So I would apply anyway, because there is an unemployment cap, right? There is the $713 max. So if you were making $250 a year, you still get something. You're not going to get anywhere close to 60% of your income, but you're going to get something. And that's especially true if you are a W-2 and paid into the fund, even if you are a the only employee of your company. But generally sole proprietors are filing as not as W-2s, right? Because they probably do not have the corporate structure set up to warrant the W-2. And in that case, the PUA is saying, we'll provide you some resources, presuming that you can justify that. So if you started your company January 1st and you had no income at all, you're not likely probably to be able to get anything through the PUA, and that might actually just be I'm out there looking for work and I can apply for regular unemployment benefits.
Okay. We have someone else who is an owner of an S Corp, and they're getting unemployment. They're completely closed down and for 3 weeks, but they haven't gotten their additional $600 a week. Do you have to apply to a different program to get that?
No, the NJDOL said that you will receive it automatically based on your original unemployment application, but it's a separate check because it's funded by the federal government. Okay. And there has been some delay in funding these programs. So you will get it, but you'll get it as a separate check, and it's retroactive to the first date of your, the start of your unemployment benefits, assuming I think it was after February 25th. So
okay, that's fantastic. Someone else had filed for unemployment last year and exhausted the benefits. Am I still able to collect the PUA or the PUC? If so, do you know how to do this? It's hard to find any info on the New Jersey employment website. And my guess is they're not answering on the phone either.
They're not answering the phone, and quite often you'll go to this website and it's crashed. Again, for the hazards of running off of COBOL or whatever, like a 1950s computer software. Yes, you can refile. So what they're saying is, even if you had exhausted your unemployment benefits in 2019, just file a new application. And they're saying you're going to file and state that you're looking for work, that you would take full-time work if you were able to find it, or you're in school if that's the option. And likely they will approve you because you don't have work right now. And the extension will apply to you.
Okay. I have someone on here who is a C Corp with employees that include and are limited to the two owners of the company. The only non-owner employee. Okay, so it's the two owners and one employee. Can they lay everybody off and put everybody on unemployment if the PPP and the EIDL doesn't come through?
Yeah, I mean, if your financial situation says, I cannot continue to carry these three people, then you have a business justification for the layoff. I mean, even if you don't, and there's no work coming in, and your business is of the nature where the owners can continue to do the work, but the employee, you can't incur another expense because owners would be willing to work without pay, but employees are not. You can lay off the employee and keep on the two owners, or lay off everybody.
So we have someone on here. It says, can a sole proprietor with an 1120S, not a Schedule C, qualify for the PPP? So
I have no idea.
I think that there is a...
That's an S Corp, right?
Well, S Corp would be forgive me for not remembering all my tax forms, but I will say that as I've reviewed the sort of background for the PPP, it looks to me like, pretty much whatever form you are and whoever are getting your money, there's a way to submit for the PPP. The question is going to be, how much can you ask for? Because the amount of the loan is tied to quote unquote payroll. So whatever the payroll analog is under the enabling rules of the PPP comes into play. So you may be limited on how much you can ask for, and you may be limited on how much would ultimately be forgiven. But my impression is there is a way to apply for the PPP in whatever form it is you pay yourself, whether that's K-1 or Schedule C or W-2 or
Sure.
these other forms.
Right, because it's an S corp with no employees, so it's a single member S corp, as if it was okay. So
So-
yeah, I think your answer.
They're right. They're issuing a W-2, so you have a way to track the payroll.
Right.
And really looking at the focus of the policy behind the PPP is please keep people employed.
Right.
And here's money to help you do that.
Right.
Okay.
And if you're not using a W-2, then you can use your 1120S, whatever your tax form is. You may have to, it may need to be a 2019 version of that form. So if you haven't done your return yet, you're going to have to go ahead and do your return. You can't get in line. I mean, here's the other problem with that nice little rule, which is, if 3 weeks ago, 4 weeks ago, I did what the government was offering me. I said, okay, I'm not going to spend time on my taxes now, and I am going to apply for the, I do want to, apply for something. Then after the fact, you find out, nope, I should have done my taxes. Well, I guess I better start doing my taxes now. Well, you can be sure that by the time you finish your taxes, this tranche of money is going to get used up. So you're going to be waiting in line for round 3. But the lesson is, go ahead and do what you had to do, and look for these opportunities when you get them with the government, and make your own opportunities in other ways. Alyssa, I actually have a question for you that I also saw on the list, which is on the program that allows employers to defer the employer share of Social Security taxes. Is there an analog for that for the self-employed who are paying basically the self-employment tax as their equivalent of the employer's share of Social Security? Is there a way that the self-employed can defer this tax?
There is additional information on the Treasury website that goes into detail about how to use that and how to apply that. You're going to need a tax professional to walk you through it, but yes, you can do that.
And the reminder there on this tax program is the same one that looking at my notes, I didn't explicitly give on things like, contract deals with landlords. This is a deferral. If something is a deferral or a quote unquote forbearance, you still have to pay it. You're just going to pay it later. So be sure that is, be sure you're prepared for that instance. It's not that you're going to get a credit, right, Alyssa? That this is a deferral. I just don't have to pay it till next year and the year after.
Absolutely.
And to Jason's point, when you're talking to your landlord or your bank and trying to negotiate a deferral, really be very specific about when the payments will start back up, whether interest and penalties will have accrued, when, how soon are they going to want 4 months of payment on day 1 of month 5, or on, will they tag it on to the end? So there's a lot of creative ways to do that, but you have to be really proactive about asking those questions during the negotiation, because at the end of the day, everybody's hurting, right? The landlord has mortgage payments they need to make. The bank wants their payments that they planned on. So be very, very proactive. The one thing I would say, to sort of reinforce Jason's point, because it was an excellent point, don't just stop making the payments. Actually reach out and discuss a solution. Because if most everybody who has just stopped making the payments is going to end up, I think, in a much more difficult situation.
And I would add to that, whatever agreement you think you've come to, do something to get it in writing, even if that is you send an email with your understanding and you ask the other side to write you an email back telling you that yes, you got it right. Number 1, that's good practice. Number 2, if it's not written down, you may not be able to hold anyone to it, and people will think something different. But, number 3 is the unfortunate reality, which is, I think I said this a couple of weeks ago, we used to talk about what if I get hit by a bus? Well, now it's what if I get hit by a virus? And the problem is if the person you're dealing with gets sick or worse, That's going to happen very quickly. There's not going to be time to do paperwork. And you may need to be proving to somebody else that you had made some accommodation. So, even if you don't call one of us, at least have an exchange of emails where you've written this stuff down to make sure everyone thinks of it the same way and that there's some record.
Just to go back to self-employed about the deferral. Danielle put a link in the chat and it takes you directly to deferral of employment tax deposits, and it's frequently asked questions, and it's, are self-employed individuals eligible to defer payment of self-employment tax on net earnings from self-employment income? And the answer is yes. And it's the same. You can defer up to 50% of the Social Security tax on net earnings from self-employment income, and it follows the same payment plan as if you had employees. So please go to the site and read the information, but that's directly from the IRS. So you're available to do that. We have another question. Someone said to file as a sole proprietor, do you still need to file with New Jersey first for unemployment, or directly at PUA at USDOL?
Everything runs through New Jersey DOL.
Yeah, that's what I thought.
So that all applications are, in fact, they're not on the USDOL site. You have to run it through your state.
Okay. We also had another question for, so what if you applied for the PPP and it runs out? Can then you go on and put everybody on unemployment?
Yes, absolutely. So, I mean, it's whatever your, I mean, because a lot of the PPP loans that are being approved, if you're lucky enough to actually have them funded, are not covering the full complement of what your payroll cost is. And so, you do the best that you can, use it for the purposes of payroll. And then when that runs out, it's back to a business decision of, can I continue to sustain this business with this number of employees?
So you're saying use good business common sense.
That's right. If
I'm reading you correctly.
Yeah, and really go back to, if your threshold for risk is low and you don't want to come out of this crisis with a lot of debt, even if it's low interest debt, it's still debt. Then there is nothing in the law that requires you to take on debt to keep people employed unless you want to. So, once the loans run out, once the money runs out, once you decide, listen, I cannot continue these business operations, it's okay to lay off.
Yeah, and like you said, it comes down to being a good business decision. We have often advised our clients not to go into debt to pay expenses. You go into debt to grow your company.
That's right.
To get a return on that investment. If you're not going to get a return on the investment, then how are you going to pay it back? So something to think about when you're looking at all these loans, and maybe the best thing is to lay everybody off. That might be the best decision, regardless of the PPP or the EIDL or tax deferrals or anything. That might be the best decision.
The other thing I'd add is, even if you're sort of a traditional, even if you're squarely within what the PPP is intended for, that is, you're an actual employer, you have W-2 employees, you're trying to decide, do I lay them off or do I keep them employed? PPP does provide, first of all, we're all hung up on what you have to do to have the loan forgiven. Even if it's not forgiven, it's a source of capital. So if you wind up, it's a fairly cheap source of capital at that. So, you may wind up borrowing and not being able to get all of it forgiven. Okay, well, at least I got my hands on some working capital. But the other thing is, the PPP is also designed to let you have that loan forgiven if you rehire. So if you're in a situation where you've applied for the PP and you're waiting and you just can't make, the next payroll, then Ayesha, I'd like you to, correct me if my interpretation is wrong here. I think you're safe going ahead and saying, look, I'm going to lay you off. There's extended, enhanced employment benefits now. It's a softer landing for you. I'm going to lay you off. And if I get this PPP, I'm going to rehire where I can rehire, because I know that the loan will be forgiven for rehiring, just as it would be forgiven for continuing to employ.
Now, I'm going to, because lawyers are a pain in the ass and we do this all the time, everything
I'm asking you.
said is correct.
Okay.
But I do want to add the proviso of when you do go through layoffs, don't promise rehire. You rehire as your business need requires. And if you have a great team, they're the people obviously that you'll go back to. But don't make promises that you're not intending to keep 2 months, 3 months, 4 months from now. And you may not know right now who you can bring back. You may not know what your income flow is going to look like. You may not know about the type of cases that are coming in for lawyers, or the type of clients that you're getting if you're a PR marketing firm or in technology. You have different categories of employees. Even if it's 3 people that did 3 different things, don't make promises about who's coming back and who's not. And by the same token, don't feel guilty about having to lay them off, because right now, unemployment compensation, when you can file the application and it works, is actually a very soft landing, as Jason said. You might be actually doing, helping your employee out by saying, okay, look, I can't continue to pay you. Go get the state benefit.
And here's the other lesson learned. It occurs to me, Aisha, from what you're saying, which is, in terms of looking ahead and making promises about what the reality is going to be, the last 3 weeks have shown we also don't even know what the government programs are going to look like.
Right.
Right. The government could say, hey, PPP, we did say July, but now we're going to extend it to October. Or they might not. They may open up a new tranche of money, or they might not. They might even come up with a new program or not. And you can't predict that. And depending on what the playing field looks like, you may make a different decision in 3 weeks or in 3 months. Just as you may have made a different decision 4 weeks ago when you filled out that EIDL and I asked you how many employees you have, if you only knew what the rule was going to be. So, all the more reason not to promise things, and especially not to promise them in the short term. I will share with everyone a conversation that the 3 of us had in preparation, for example, like in dealing with your landlord. You'd like to say something like, look, give me a break, give me 3 months without rent, and I'll agree now to extend the term of the lease. The problem with that is, what if you just don't survive? And now you're on the hook for an even bigger lease, potentially. So all of the promises you're making, wherever they are, need to contain the caveat, this is my intent. This is what you may say, this is my intent. This is what I'm going to try to do. I will promise that on July 31st, we'll make a decision, but do everything you can to avoid promising something down the road before you know for sure you can do it.
Yeah, and I think that's a really, really good point, is to make the date of when you can make a decision, because we don't know how long this is going to last. We're hopeful that we will be released from our homes and business will be able to start to resume, but we don't know when. We can't make decisions on that. And kind of a question for both of you. So you have a company, you've had to lay everybody off because all your projects were canceled. And then you get a project and someone on your team you can hire back because they kind of do this work. Is there any problem with that? Like, is there, you worry about discrimination, you worry about all these different things. Like, what kind of guidance can you give on that?
Your guidance always is the business justification for why that person. So in fact, I was talking to a client this morning. They need to bring back one employee who does a very specific task that relates to the case that just came in. That's a business justification. You
Okay.
don't have to re-advertise for their jobs. You don't have to do any of that stuff. You just, you need to be able to justify why this person, right? So if the other employee says, well, you were behaving discriminatorily because you brought back the white male and not the African American female, you need to have a business justification for why you did that.
And you need to document it and
Absolutely.
have documentation of why you did it. And I loved your point about don't try and document stuff in December that happened now, because we cannot recreate the past as best as we think we can.
No, and you should never be recreating. You should be documenting contemporaneous to the action. That is the most, that's the clearest, most reliable evidence that you have, right? A document, a memo to the file, to the personnel file, to your file, somewhere, even if it's a handwritten scribbled note on, the back of a takeout menu, right?
Yeah.
Document this. The writing is really important. And I think another really important thing to think about as you start to plan to bring employees back is take a look at your employee handbook, because you likely have a whole bunch of different ideas about how to handle this type of crisis situation that I'll bet you money that does not exist in your employee handbook right now.
Right.
That's something you really need to be, you've got some extra time now. You're not driving to clients. You're not driving to court. You're not doing all of the other things that sucked up dead time. You have that time now. Start really focusing on your business, looking critically at all of the aspects. Maybe it's what's a better way to do the accounting?
Mm-hmm.
Maybe you were doing it before. That's always, unless you're Alyssa, it is always the least efficient use, certainly of my time, to be doing the books. That's not what I enjoy doing, and that's certainly not what I'm going to, focus my time on. But you should start taking a critical look at all of your business functions to see what's actually working now.
Mm-hmm.
How is stuff working now? Is the fact that we're all doing a Monday morning Zoom conference to check in with employees effective? That might actually, start thinking about whether teleworking is actually a good solution. Maybe that also factors into how you renegotiate with your landlord.
I would throw out another component of that as we talk about, who you're going to pay and what you're going to promise and getting your house in order, which is pay close attention to which of these obligations carry a personal guarantee. Which of these ones have your own name on them and not just your company's name on them? Your lease may very well hold you personally accountable. Things like your payroll taxes, for example, you are certainly personally accountable for, and you've got to do those no matter what. But if it is something for which you are not personally accountable, for which it's only the company on the line, and that means if the company folds, that person may not get paid. The other part of that is this is a time to make sure that your corporate governance house is in order, that you have, as we lawyers say, or obeyed the corporate formalities. You've done your record keeping, you filed your annual reports, you do things like resolutions, memos to the file, so that where you have the protection of the limited liability of that LLC you formed or that sub S you formed, you can take advantage of that in bad times by knowing that you don't have personal liability. So that's another thing to keep track of.
Okay. We have one more question, and then I want to get to everybody's quick tip for this week. Someone says they have a new single member LLC that just started operating before COVID. It doesn't have any tax record yet, and it lost the one project completely before execution due to the pandemic. Can the owner apply for assistance or PUA? Like that is, and I've seen this situation before, like what advice can you give them?
So you can apply for a straight unemployment unemployment claim. You'd also be eligible for the PUA, right? Because you can show that you had a contract and you lost a contract, that you're an owner. Not having the tax history though, you're probably better off with just a straight unemployment claim.
Mhm.
Yeah, we've actually had someone else who started their business in January, and then they actually they started in December. They had a loss in December, so that was what their tax information was, and they were not allowed to get anything because of that, because they were showing no income.
Mhm.
So I have to guess that if you started, you probably have no income.
Yeah, and so the PPP and EIDL are not going to help you go for unemployment.
Yeah, unemployment would be the best one. So let's go around. I want to hear some hot tips. Aisha, what's your hot tip for us? What's good?
What is my hot tip? Alyssa, as we talked in this prep call, we are all spending a lot of time on Zoom these days. In fact, honestly, it's about the only sort of human interaction we get anymore other than our husbands and kids. So if you look at the bottom of your Zoom window, you have your name that appears. Really think about adding the name of your business, the name of sort of the category of what you do. So mine says business and employment attorney. This is part of your marketing, right? And this is, it's a little tip of something that is in everybody's face for the length of that Zoom conference. Keep on marketing.
Mm-hmm. And I'm going to piggyback on Aisha's too, because do not, look at your budget and do your marketing, because the people who are out there who are talking to other people are going to be the ones who come out of this. A lot of people, the first thing they cut is their marketing budget. And I highly suggest, if you are still making any sales, to keep marketing part of your budget. If you have to, we do have a couple of businesses that are closed. I would get on Meet Edgar. That is my tip. It's a program called Meet Edgar, and it's a social media campaign, and it pushes it out to all different, it pushed out to Instagram, Facebook, LinkedIn, and it schedules it for you. And it also pulls the information off the web, so you can read articles and post them. And it's fantastic. And it takes about 15 minutes every day. And you can set yourself up for the whole entire week in 15 minutes.
Cool. So my hot tip is basically is two things you can do to keep the economy moving and to get the economy to recover. Two things you personally can actually do. And one is to do business with each other, to look for the other entrepreneur-operated businesses, local businesses or not. Look for the ones that have someone like you who's scrappy and who's going to find a way, and do business with each other. And if we do business with each other, because we're going to all keep plugging away, then we're keeping that part of the economy cranking, and we stay creative that way. And my final hot tip is one that I'm prepared to get on a little bit of a soapbox about, which is when you leave the house, whenever you leave the house, wear a darn mask. The thing that's going to get the economy going is that people stop getting sick.
Sure.
And you're wearing the mask a little bit for you. You're mostly wearing it for everybody else. And the plain, simple science of this disease is you are contagious a long time before you feel like you're sick. And you may be contagious and never feel sick. And the only way we're going to keep other people from getting sick is to wear the mask, and wear it every time we go out, wear it to walk the dog, wear it to take a walk around the block. Just wear the darn thing so people stop getting sick. And if we stop getting sick, we can reopen the economy. Wear the mask.
Amen. Well, thank you so much. Thank you, everybody, for attending. Thank you, Aisha and Jason. Again, amazing information. This recording is going to be available to everybody who's on here, and we'll send it out to everybody. And we are going to do this again in 2 weeks. We're going to have webinar Wednesdays, and it's going to be every other Wednesday at 1 o'clock. And we will send out more information about what our next topic is. Just going to be question and answer. We're going to talk like we're doing a fireside chat. I don't know if we're going to do afternoon drinks. I'm not really sure. It might be coffee to let us get through the day, but we'll be answering questions and discussing different topics that have come up. All right. It's great talking with everybody, and thank you very much.
Stay well.
Bye, everyone.